Stop whatever you're doing, because if you own tech stocks, EV stocks, solar stocks, or literally anything with a battery in it, this could blindside you. China didn't just tweak a policy. They didn't raise a tariff. They changed who gets permission to buy silver. And when a country controls permission over the metal that powers your phone, your car, your solar panels, and half of the global economy, that's not a commodity story anymore. That's a financial system story. Why nobody is talking about this? Here's the crazy part. Almost no one on Wall Street is talking about it. Turn on CNBC and it's all Fed rate cuts, CPI numbers, maybe Bitcoin doing something stupid again. Meanwhile, China quietly rolled out export licensing requirements on precious metals, including silver, which means from now on, silver doesn't just leave the country automatically. It has to be approved. That one word, approved, changes everything. Because silver isn't just some shiny rock. It's one of the most industrially important metals in existence. The real role of silver. Silver is in solar panels, electric vehicles, smartphones, semiconductors, medical devices, military equipment, satellites, power grids. You are watching this video right now because of silver. And here's the part nobody tells you. We don't mine enough of it. Most silver is produced as a byproduct of mining other metals like copper and zinc. That means we can't just magically increase silver production when demand goes up. So demand rises. Supply stays flat. That alone is already a problem. Now layer on top of that a country controlling exports. Physical versus paper markets. This is where it gets wild. There are two silver markets. The paper market, futures contracts, ETFs, COMEX. The physical market, actual bars, actual deliveries. Normally they stay aligned. But right now they're splitting apart. In Asia, physical silver is trading at massive premiums. In the US, paper silver is still pretending everything is fine. It's like going on Zillow and seeing homes listed for $500K, but in real life, no one will sell you one under $750,000. The price you see is not the price you can get. China's strategy. Now ask yourself this. Why would China do this? They are the world's largest manufacturer of solar panels. They are dominating EV production. They are investing aggressively in power grids, AI hardware, and semiconductors. What do all of those require? Silver. If China restricts exports, they get cheaper domestic supply, guaranteed access for their industries, higher prices for everyone else. This is not accidental. This is industrial policy. What happens next? Let's walk through what this means. Western manufacturers suddenly have to compete with Chinese buyers who have first access to silver. That means higher input costs. Higher input costs mean lower profit margins, higher prices to consumers, slower production growth. That's not bullish for EV stocks. That's not bullish for green energy. That's inflationary. And remember, governments can't print silver. The illusion of abundance. People assume silver is abundant because the price doesn't reflect scarcity yet. But that's the paper market lying. If you tried to buy bulk silver today, not a coin, not an ETF, but real industrial volume, you would immediately see the shortage. Refineries are behind. Delivery times are stretching. Premiums are rising. This is what a real shortage looks like before it shows up in price. Why this feels familiar? This reminds me of 2020. Back then nobody cared about shipping containers, until suddenly everything cost more and took 6 months to arrive. Silver is the next shipping container crisis, except it sits at the heart of the clean energy transition. What investors are missing. Wall Street is still valuing solar companies as if materials will always be cheap. They won't. They're valuing EV manufacturers as if supply chains are stable. They aren't. They're assuming governments can just subsidize their way out of shortages. You can't subsidize atoms. What this means for you. This isn't about buying silver coins and hiding them under your bed. This is about understanding that structural supply shifts don't reverse overnight. Once a country controls exports, they rarely give that up. And when the world wakes up to the fact that silver isn't just a commodity but a strategic resource, that's when the repricing happens. Not gradually, Suddenly. Final thoughts. So no. China didn't literally break the silver market. They did something far more important. They changed the rules. And when the rules change in commodities, the money always moves last. By the time it shows up on CNBC, it's already too late. So now that we understand what China is doing, let's talk about the chain reaction this creates. Because this doesn't stop at silver. It moves into copper. It moves into lithium. It moves into rare earths. And once one country proves that controlling a strategic metal gives them pricing power, the rest of the world doesn't just ignore that. They copy it. The domino effect. Imagine you're running a solar panel company in California. Your margins are already thin. Now your supplier says, sorry, delivery times doubled, and prices are up 30%. You don't eat that cost. You pass it on. Which means your panels get more expensive. Which means installations slow down. Which means government climate targets miss. All because of silver. Governments are now forced to react. This is where things get political. The US doesn't have a silver problem. It has a processing problem. We mine some silver, but we don't refine nearly enough of it domestically. We outsource that to China, which means even when we own the raw material, we still need their infrastructure to turn it into something usable. That's the vulnerability. The green transition myth. Everyone thinks the green transition is inevitable. It isn't. It is material dependent. And right now, the materials are becoming bottlenecks. EV mandates, solar mandates, battery mandates all assume metals flow freely. But metals don't vote. And they don't care about government deadlines. What smart money watches. Big institutions don't wait for headlines. They watch inventories. They watch warehouse drawdowns. They watch delivery delays. And every one of those signals is already flashing yellow for silver. How this ends. Here's the pattern. Physical shortages intensify quietly. Industrial users lock in long-term supply contracts. ETFs struggle to source real metal. Premiums explode. Media finally notices. Retail piles in at the top. We are between steps 2 and 3. The psychological trap. The biggest mistake people make is thinking price moves first. It doesn't. Scarcity moves first. Price reacts later. By the time silver looks expensive, the shortage is already years old. Final reality check. So no, this isn't a silver apocalypse tomorrow. This is a slow burn. But it changes the foundation of the global economy in a way most people won't see until it's already done. And that's exactly how the biggest shifts always happen. Quietly, until they aren't. Let's back up a bit, because this didn't happen overnight. Silver has been undervalued for decades. Why? Because it's seen as a poor man's gold, or a hobbyist metal for investors. People buy coins, ETFs, or maybe stack a bar in their closet. But nobody thought of it as an industrial powerhouse. Fast forward to today, and that narrative is completely flipped. Silver is essential, and yet the world treats it like a novelty. It's almost comical if it weren't so dangerous for markets. Personal anecdote, Graham style. I remember back in 2015, I bought a few silver coins as a fun side investment. At the time I thought, it's kind of cheap. Maybe it'll go up. Fast forward to now, and I realize, silver isn't just a speculative asset. It's the backbone of modern technology. And suddenly, that fun hobby I had becomes a serious industrial concern. That's the point. Most people are treating silver casually, while China is playing chess with it. The global supply web. Here's the thing. Silver isn't mined evenly around the world. Top producers include Mexico, Peru, China, Russia. But here's the twist, China isn't just mining it. They refine it, process it, and distribute it globally. That's where the real leverage comes in. Even if another country produces silver without Chinese processing, it's basically unusable for high-tech industries. Real-world example. Take the solar industry. A solar panel factory in Germany might source silver from South America, but it has to go through Chinese refiners. If China limits exports, suddenly that German factory can't produce as many panels. Costs rise. Delays happen. Projects stall. This is supply chain risk in its rawest form. And it's why investors should be paying attention. Analogies and humor, Graham style. It's kind of like if your favorite burger joint suddenly decided, sorry, no more ketchup for the next 6 months. If you want burgers, bring your own ketchup. Sure, the burger exists. Sure, the restaurant still works. But nobody is happy. That's exactly what's happening with silver. Why the media misses this. Here's why you don't see CNBC talking about it. Silver isn't flashy. It doesn't swing 10% in a day. It doesn't have a CEO to blame. It's boring. Until suddenly it's not. And that's the danger. By the time media reports it, the real money has already moved. Industrial demand is exploding. Let's quantify the problem. EV batteries use silver in current collectors. Solar panels use silver paste for conductivity. Smartphones, laptops, medical devices all use silver contacts. Demand is rising exponentially, but production is basically flat. And now add export restrictions. Do the math. The shortage becomes inevitable. Investor takeaways, practical advice. This is not a buy silver coins tip. This is about understanding supply risk. Companies dependent on silver could face lessons from gold. Let's be honest, silver has always been overshadowed by gold. Gold gets all the headlines. People talk about it like it's the king of commodities. Oh, buy gold, hedge your risk, retire rich. Silver is like the younger sibling that's actually more important than anyone realizes. Here's the kicker. Historically, silver tends to move much faster than gold during industrial booms. So when China tightens control, it's not just a supply shock. It's a leveraged industrial boom waiting to happen. Except most people are asleep at the wheel. Everyday examples. Let's bring this to your daily life. You open your laptop. Tiny silver contacts inside make the circuits work. You plug in your EV. Silver paste in the battery connections is silently doing the heavy lifting. Solar panels on your roof. Half of the conductivity relies on silver. Imagine if supply suddenly dropped 20%. Prices wouldn't just creep up. Projects would stall. Orders would be delayed. Tech companies would scramble. And here's the scary part. Most of the world has no backup plan. The domino effect on industries. Think bigger. Automotive industry. Delays in silver could slow EV production. Solar industry. Higher silver prices equals higher panel costs equals slower adoption. Electronics. Margin pressure on devices. Potentially higher prices for consumers. Defense. Some military tech uses silver in specialized circuits. Any disruption affects security. This isn't speculation. This is supply chain math. Comparing to 2020 supply chain crisis. Remember the shipping container crisis? No one cared until suddenly everything cost more, and delays stretched months. Silver is the industrial equivalent, but worse because you can't print silver like you can print money. And just like shipping containers, by the time everyone realizes it, the damage is already baked in.
Practical investor perspektif.
Here's what a smart investor does. Track inventory flows, not just prices. Watch industrial usage trends. Understand geopolitical leverage. China controls the bulk of global refining. Identify potential beneficiaries. Companies that secure long-term contracts with silver supply. Hedge exposure through diversified industrial metals, not just speculation. Graham-style humor and commentary. Think of it like this. Imagine you're at a party, and the host quietly says, "Sorry, the snacks are limited. Only VIPs can grab them first." You keep waiting, thinking snacks will magically appear. Meanwhile, VIPs are eating all the chips, and you're left with air. That's literally what's happening with silver right now. The VIPs are China and large industrial users. Everyone else? Watching prices rise. Broader economic implications. Inflationary pressure. Higher input costs ripple through manufacturing. Stock market effects. EV and solar companies could see compressed margins. Currency and trade. Countries dependent on imports may face tougher balance of trade issues. Even though the average investor may not notice today, these effects compound quietly. Final thoughts before closing. Let's be clear. China didn't break the silver market in the dramatic sense. They changed the rules of the game, and that matters far more than a date.